In a world where finance was once confined to the exclusive circles of Wall Street and high-net-worth individuals, a revolutionary shift has occurred, reshaping the investing landscape forever. Welcome to the age of crowdfunding and peer-to-peer lending, where ordinary people are empowered to become investors, supporting innovative projects and businesses that align with their passions and values. In this article, we will delve deep into the rise of crowdfunding and peer-to-peer lending, exploring how these groundbreaking platforms are democratizing finance and offering new avenues for individuals to grow their wealth while making a positive impact. The evolution of finance. The traditional investing scene was often perceived as a complex maze, accessible only to those with vast financial knowledge or considerable capital. However, this notion was challenged by the emergence of crowdfunding platforms in the early 2000s. Suddenly, entrepreneurs, artists, and dreamers had the opportunity to pitch their ideas directly to the public and receive funding from a community of supporters. As the internet and social media revolutionized communication, crowdfunding gained momentum and expanded into various sectors. Kickstarter and Indiegogo became household names, allowing anyone with an internet connection to back a new gadget, a film project, or a charitable cause. This democratization of finance breathed fresh air into the entrepreneurial ecosystem, fostering innovation and creativity without the traditional barriers to entry. The power of the crowd. One of the most significant advantages of crowdfunding is the power of the crowd. In this context, the crowd refers to a diverse group of individuals coming together to collectively fund a project. The wisdom of crowds often proves to be more insightful than individual experts, as the collective decision-making process incorporates a range of perspectives and insights. Imagine a fledgling startup with a brilliant idea seeking funding on a crowdfunding platform. As the campaign gains traction, the crowd evaluates the project's potential, market viability, and team behind it. If the idea resonates, backers come pouring in, providing the necessary capital to bring the venture to life. Moreover, the crowd not only brings financial support, but also acts as an engaged audience, offering feedback and spreading the word about the project to their networks. Thus, crowdfunding transforms the relationship between creators and consumers, fostering a sense of community and shared purpose. The birth of peer-to-peer lending. While crowdfunding revolutionized the realm of startups and creative projects, another financial paradigm shift was unfolding on a different front: peer-to-peer lending. This alternative lending model emerged as a solution to the inefficiencies and exclusivity of traditional banking systems. Peer-to-peer lending platforms like Lending Club and Prosper connected borrowers directly with individual lenders, cutting out the middleman. Borrowers could access funds at more favorable rates, while lenders earned attractive returns on their investments. This model not only provided borrowers with more accessible credit options, but also empowered lenders to diversify their portfolios beyond the stock market and real estate. As people witnessed the potential of peer-to-peer lending, the industry experienced exponential growth, transforming the way individuals think about investing and borrowing. The appeal of peer-to-peer lending. Peer-to-peer lending's appeal lies in its simplicity and transparency. Investors can browse through various loan requests, each with specific details about the borrower's purpose, credit history, and interest rate. This level of transparency enables lenders to make informed decisions based on risk and reward, tailoring their portfolios to match their risk appetite. Furthermore, peer-to-peer lending platforms provide robust risk assessment tools, making it easier for investors to assess the creditworthiness of borrowers. Diversification is encouraged, allowing lenders to spread their investments across multiple loans to mitigate the impact of defaults. Unlocking financial opportunities. The rise of crowdfunding and peer-to-peer lending has opened doors to countless financial opportunities, not only for investors, but also for entrepreneurs and individuals seeking funding for personal projects. For entrepreneurs, crowdfunding offers an alternative path, to secure funding without surrendering equity or relying on venture capital. This democratization of funding means that innovative ideas, even those previously considered too niche or unconventional by traditional investors, now have a chance to flourish. On the other side of the coin, investors have gained access to previously untapped investment classes, such as early-stage startups, artistic projects, and impact-driven enterprises. This diversification allows investors to spread risk while supporting causes they believe in. Moreover, peer-to-peer lending has empowered individuals with an opportunity to take charge of their finances actively. People looking for debt consolidation, funding for education, or capital for small businesses can now turn to peer-to-peer lending platforms to secure loans on fair terms. This removes the dependence on traditional banks and offers borrowers more flexibility and control over their financial journey. Navigating the world of crowdfunding. As enticing as crowdfunding and peer-to-peer lending may seem, they are not without their challenges. It's crucial for investors and borrowers alike to approach these platforms with caution and due diligence. Research thoroughly. Before investing in a crowdfunding project or lending to a borrower, research the platform, the project's or borrower's history, and the team behind it. Look for red flags or any inconsistencies that could indicate potential risks. Diversify intelligently. Diversification is a powerful risk management strategy. Spread your investments across different crowdfunding projects or loans to minimize the impact of any single project or loan defaulting. Assess risk tolerance. Consider your risk tolerance and financial goals before committing to any investment. While crowdfunding and peer-to-peer lending can offer attractive returns, they are not risk-free endeavors. Stay informed. Keep yourself updated on the latest developments in the crowdfunding and peer-to-peer lending space. Stay abreast of industry trends, regulatory changes, and best practices to make informed decisions. The road ahead. The future of investing is bright and full of potential. Crowdfunding and peer-to-peer lending have redefined the way we approach finance, unlocking opportunities for all, regardless of wealth or status. These platforms have challenged the notion that investing is a privilege reserved for the select few. As the world continues to evolve, so will the financial landscape. The rise of decentralized finance, DeFi, and blockchain technology promises even more disruption, offering new ways to access and manage capital. Embracing these changes and staying open to innovative investment opportunities will be key to staying ahead in this ever-changing world. As we conclude our exploration into the world of crowdfunding and peer-to-peer lending, we are left with a sense of awe at the transformative power these platforms hold. The shift towards a more inclusive and participatory financial system is well underway, empowering individuals to shape the future of finance and contribute to a world where innovative ideas and endeavors can thrive. So whether you're an aspiring entrepreneur seeking funding or an investor looking to make a difference while growing your wealth, embrace the opportunities presented by crowdfunding and peer-to-peer lending. Step into this new era of investing, where you have the power to redefine finance and leave a positive impact on society. Thank you for embarking on this enlightening journey into the realm of crowdfunding and peer-to-peer lending. If you found this article insightful, be sure to share it with others who might be interested in this redefined world of finance. Remember, by investing wisely and supporting meaningful projects, we can collectively shape a brighter and more inclusive financial future for all.